Hello guys, today we'll spend a bit of time on the tax loss carried forwards on how you can actually model it in Excel. But first thing, let's try and do it in a manual way. I think that will make a lot of sense. So say, these are your tax losses. You create two tables for the use and remaining. These are your profits. So before you compute tax, you need to make sure that the tax loss carried forwards have been used. And that is the only way you can minimize the obligation to the Inland Revenue Authority. So this is the profit, this is what you're carrying forward. So it is logical that this is actually going to be used. It's expiring in year one, so you use the whole 340, meaning that in year one, there will be nothing remaining. Then you have used 350. What does it mean? It means if in year two, you have 210 that will have to, that can be used or that can be used, and it's expiring in year two, what it means is that you're actually going to use the difference of that. So you use 110. What does it mean here? It means that you're going to remain with the 100. So you have exhausted the whole thing, meaning here you remain with 770 and 109, like that. You cannot model, and I've already said it, you cannot model what you don't understand. So first thing first, you need to understand, and this is what we are doing first. We have to understand the concept, the principle, then that is when we can model. So what does it mean in year two when you have profits of 188? So remember that you have already used 110 out of the 200 there, out of the available 210. So you're actually going to use 100, meaning that here you're going to have 0. What does it mean? This side here, you're actually going to use 70. It means that here you have 0. So you have been told that in here, okay. So in here, so you're going to use the available of 100 here because it's expiring up to year 4. So yes, you're in year 2, meaning that you have how much? This minus sum of that. Oh, sorry. Which is that. Minus sum of this. So use 18. So in there, how much would you remain with? From the 109, you will remain with 109 less 18, would remain with 91. So you have something. Is it something like this? So in your 4, you will have 91 there. In your 3, I mean, you have 91. And we are actually saying this has already been exhausted. You are remaining with this. So from the 100, you use 91. So what does it mean? It means that from there, you are going to have 0. You have something like this. You would have exhausted based on the tax losses available. You would have utilized all your tax losses. So let's pick this. This was manual, very manual. Let's see how we model it. So start from here. To be equals mean. So the minimum of what is remaining, comma, your profits there, minus sum, that, lock the row, copy. Here you have another formula, which will be equals if the year in here is less or equal to the year in question. If it's true, give us 0. Otherwise, subtract the remaining amount here minus the remaining amount there, the used one. So that is what you're going to have something like this. There's some minor differences which will need to be debugged. There is typically wrong with what we have done. We need to try and debug. This one looks okay. F1, which is F1, guys. We should have locked the row, not the column. We locked the column, so I have to change this because I'm not able to see the 70 coming there. So here, this was an understatement. This part was wrong. Because it was used in year 3, so there was no way we should have added a number that should have been like this. So how much would have remained? This now makes a lot of sense. This is how you can model the tax loss carried forwards. Thank you so much and bye-bye. See you.